Hi, my name is Yazan Ibrahim, also known as Yazan Abu Ghosh. Today we will take about 1.2 business processes. Imagine you've just stepped into a grand lecture hall, its walls adorned with books, monitors, and the hum of activity, all focusing on one key enigma, the intertwined worlds of information systems, IS, and audit. As the camera pans across the faces of eager learners, we begin an exciting journey into what makes IS auditing not only crucial, but also an intricate ballet of business understanding, risk assessment, technology, and accountability. To understand IS auditing, think of it as the watchtower that oversees the wild terrain of an organization's operations, particularly the deep integrations of technology and processes. At the center of any successful organization lies its business processes, the invisible highways of workflows that lead to delivering value. An IS auditor must first grasp these processes, like learning the schematics of an elaborate clock, not merely as a series of tasks, but as a dynamic ecosystem controlled by policies and procedures. Ultimately, this understanding aids one central purpose, ensuring the systems and controls work together harmoniously to achieve organizational goals. Picture this. A business process is a sprawling machine with interconnected cogs and gears, each movement resulting in products or services reaching a customer. This machine, however, isn't mindless. It is governed by policies, operated by people, and monitored by digital systems. To safeguard this machinery, organizations appoint process owners, figures of authority who ensure processes run efficiently and mitigate risks. They're like mechanics who balance high-level oversight with detail-oriented troubleshooting. Enter the IS auditor, a savvy investigator with the blueprint in hand, to ensure that every control in this process machine works as intended and safeguards it against failure. Shifting focus, the role of IS auditing crystallizes within the internal audit function, the backbone of organizational accountability. The starting point for this function is the Audit Charter, a document akin to a constitution, officially granting the auditor a mandate to operate. This charter doesn't just float in limbo, it lives and breathes management's objectives, endorsed by senior leadership or the board of directors. Its purpose is clear. Define the responsibility, authority, and scope of the audit team, ensuring that IS auditors have the independence and authority to do their work without influence or interference. Think of an audit charter like a ship's orders. It maps out the course, highlighting islands of risk and turbulent waters. Whether an IS audit team is in-house, independent, or part of a larger financial audit operation, this charter grants them the tools to navigate complex IT environments, from legacy systems to cutting-edge cloud technologies. The charter also becomes the guiding star for maintaining independence in reporting, ensuring that the findings resonate honestly with top-level decision makers. Now imagine a case where an organization outsources its IS audit. Here, the charter doesn't diminish in importance, but rather expands its scope. New considerations arise about contracts, confidentiality, and ensuring the third-party audit partner meets regulatory and professional standards. As we deepen into the IS audit function, the spotlight moves to the planning process, a meticulous stage where strategy and foresight intersect. Planning begins with a vast canvas known as the audit universe, the sum of all potential auditable areas. It's as if the IS auditor paints a map of the organization's technology and processes, where each dot represents systems, activities, or critical operations that could be examined. Planning is not just academic, it's a chessboard of risk and resource management. Take, for example, a retail business with widespread digital sales platforms. One critical risk factor is reputation damage. Imagine the fallout if a customer data breach tarnishes their brand. Auditors use objective criteria like how long it would take to recover from reputational damage to calculate risk. Is it 6 months or just 3? Combining quantitative measures with qualitative input from business process owners, auditors create a risk-ranked list of audit targets. Here lies the irony. While the ideal audit plan would tackle every identified risk, available resources rarely allow for such luxury. The IS auditor must consistently balance risk magnitude against organizational priorities, all the while communicating these potential gaps to senior management. Planning doesn't end there. Each individual audit assignment demands its own customized preparations. Much like preparing for a mission where reconnaissance is critical, the auditor dives into historical context, reviewing prior work papers, industry regulations, and even software characterizations to craft an efficient, technologically informed approach. If technology changes, or if a company adopts, say, a new AI-based inventory system, the audit plan grows dynamic, ready to adapt to shifts in the IT environment. And what about the laws and regulations that govern this ever-evolving digital territory? Each swipe of a credit card, each hit of a keyboard is woven into a legal framework specific to the organization's region and industry. IS auditors must tread carefully, ensuring compliance with laws around electronic signatures, data protection, and even the storage of sensitive files. Industries like finance or health face even stricter controls, requiring the auditor to develop an almost forensic level understanding of regulatory benchmarks. Imagine an e-commerce company navigating international markets. For one jurisdiction, encryption of sensitive data might suffice, but in another, customer data may require explicit consent before it's even collected. The IS auditor acts as the bridge between these external requirements and the organization's internal systems. They're not just checking a box, they're mapping compliance, challenging assumptions, and strengthening defenses against legal exposure. This brings us to the business process applications that bring life to technology-driven systems. From e-commerce platforms to electronic funds, transfer systems, ATMs, and even point-of-sale terminals, these applications have revolutionized industries. Yet they introduce layers of complexity. Consider the rapid, ephemeral nature of web-based transactions in e-commerce. The challenge isn't just tracking transactions, but ensuring that confidentiality, integrity, availability, and even non-repudiation, a customer not denying a legitimate purchase, are all upheld across the process. E-commerce, for instance, operates on tiers: front-end user interfaces, the website; middle-tier business logic, processing inventory or pricing; and back-end data servers, databases of what's bought and sold. IS auditors don't just inspect these systems. They scrutinize controls ensuring sensitive data, like credit card information, is encrypted at rest and in transit. Risk scenarios, for example, hackers exploiting vulnerabilities in a company's back-end servers, are turned into actionable audit points by the IS auditor. The layers of technology, however, don't stop at customer transactions. Behind the scenes, silent workhorses like electronic data interchange, EDI, power corporate supply chains, replacing paper orders and invoices with direct digital communication. Or take industrial control systems, such as those managing factory machinery or even national critical infrastructure, where security risks are not just about profit, but about human safety and environmental hazards. Each of these spaces demands specialized expertise. It's here that IS auditors collaborate with specialist experts, or perhaps outsource portions of their own work. But remember, the original responsibility doesn't disappear. Like a conductor who doesn't play every instrument yet controls the tempo of the orchestra, the internal team manages external expertise, ensuring contract terms, confidentiality, and regulatory standards are met. Finally, think of artificial intelligence expert systems and CRM platforms, domains where algorithms drive decisions and determine customer experiences. These systems, though technologically potent, can amplify risks. A poorly designed AI model responsible for credit scoring could unintentionally reflect biases, fundamentally misunderstanding human priorities. For IS auditors, the task is twofold: ensuring that such systems adhere to transparent, ethical standards, while also validating their alignment with business goals. Thank you for watching, and see you in the next video.